Network-wide, we have been tracking this story deep in debt, and we're going really state by state, municipality by municipality, to get an accurate read on just the real level of concern there is. Up in Massachusetts, that state is about to face the biggest budget cuts in 20 years. Changes are going to impact pensions, health care, pocketbooks of so many of the Bay State residents. Governor Patrick says the cuts are going to be necessary because of a $1.5 billion deficit. Joining us now is the state treasurer, Stephen Grossman, and he joins us from Boston. Thank you so much for joining us today, Mr. Treasurer.
Good morning. Thanks for having me.
Thank you for joining us. When it comes to states, municipalities going out and trying to raise money through municipal bond offerings, we've seen, sales of municipal bonds hit a 5-month low last week. You've got a sale upcoming. What kind of appetite are you anticipating?
I think the appetite's going to be very strong. We just got an upgrade from S&P from AA stable to AA positive, and aren't many states getting an upgraded rating, and I think there are 3 reasons for it. 1, we're living within our means and we're making the necessary cuts, as painful as they are. Number 2, we're engaged in strong pension reform. We've just announced a package of pension reforms which are going to save us $5 billion over the next 30 years. And number 3, I think we're having good success at managing our pension assets and reducing our unfunded pension liabilities. So those 3 factors, I think, are impacting us in a positive way, and I think we'll be well welcomed into the marketplace this week when we go to market for $146 million.
Where do you see that demand coming from? Because we have seen a lot of fear about the reality of municipal finances right now, and some real outflows from bond funds. Who's doing the buying?
Well, there has been obviously a huge outflow, and we've seen it week after week after week. But I think you look at individual credits like Massachusetts, where not only are we doing the things I outlined earlier, but we're doing more disclosure than we've ever done before. I mean, Massachusetts intends to be the thought and practice leader when it comes to disclosure, and you know all the problems that some states have had with failure to disclose appropriately. So when investors know that you're confronting your problems, when you're getting ahead of the curve in terms of the issues and the challenges, when you're not letting the problems control you, but you're controlling them, and you're saving significant dollars on your pension funds and putting more money every year into the pension line of your budget, all those things contribute to investors feeling confident that Massachusetts, with its very strong economy, innovation economy, will come out of this recession faster than most other states. We created jobs at a rate faster than all but 5 other states. So all those things, I think, contribute to an appetite for Massachusetts securities.
This morning, Bloomberg News is reporting that when the budget comes forward on February the 14th, President Obama is going to seek a delay of state tax increases and also suspend interest payments on state debt to try to help out with unemployment costs here. What does that do for you?
Well, anything the federal government can do to help us, we welcome. And obviously the stimulus funds pretty much going away in the fiscal 12 budget for states is creating this huge problem. But again, with a $1.5 billion hole, Governor Patrick and all of us have done our best to fill that hole and fill it quickly. And I think with the kind of cooperative relationship we have between the governor, the legislature, state treasurer's office, that kind of collegiality and collaboration says to the investor community, says to the business community, Massachusetts is dealing with the problems, dealing with the crisis, and their bonds are viewed positively, which is why we did get an upgrade. I'm thrilled that S&P gave us that upgraded bond rating, and I think that that's a major factor in why they gave us the upgrade. A sense that our prospects are strong business-wise, that we're dealing with our problems, living with our means, and doing the kind of disclosure that investors are insisting on.
Well, but break it down for me. I mean, have you looked back at the envelope? What kind of impact there will be? What kind of dialogue have you had with the federal government about this specific proposal? I mean, it would put a moratorium on tax increases and interest payments in this year and next for unemployment benefits.
I haven't yet had that conversation, and obviously I'll meet with our Secretary of Administration and Finance and get a briefing on that.
Yeah.
But I do know that when you look at our total budget and you look at our total expenses, we should actually have an increase in the size of our stabilization fund at the end of this fiscal year. The fact that we'll have more money put aside in the rainy day fund at the end of the next fiscal year than we do now, that's a positive sign. That's why the investor community sees us in a positive light.
All right. Good luck this week with that bond offering. We will track that and how you do.
Thanks.
Thanks for your
having
time.
me, and hope you'll have me back.